Bernhard, thank you for sharing the following insights with Bloomberg Adria. You work closely with banks, with asset managers. What would you say are the top three barriers, maybe, in holding institutions back from adopting tokenization on a wide scale?
So the three barriers in the past was first, they were considering the entire FATIC as a competition. Then second, they were looking then at the regulation, and we're now talking about a couple of years back, and they couldn't find a regulation that that is harmonized, that applies for an entire region, and so, or maybe even in the gray area. Yeah, so regulation was the second point. And the third point was that they couldn't directly find some use cases. Why is that? Because the demand wasn't there back in the days. So they had a couple of crypto guys that might be interested, might not, in a certain topic. And if they're interested, they probably relevant to back in the first.
When you say back in the day, we're talking what, 5 years back, 10 years back, maybe?
10 years to, let's say, 2-3 years back. And adoption, especially when it comes to large institution, it just takes a while. This is quite normal. Any innovation that you look at, be it the internet or be it the car, it just takes decades that it becomes really mainstream. And especially for digital assets or for crypto, they're talking about money. When Airbnb came, yes, this jumped on our phones quickly because you can book an Airbnb for 200 euros, 100 euros. There's not much lost if the platform is not good or if the Airbnb is not good, or it's not as good as your previous offers. But when we are talking about money, or when they're talking about cars back in the days, people were afraid of this. People were didn't feel safe with it. And then a couple of banks were, of course, leaning against it. And the combination of new innovation, people were afraid of it, banks were leaning against it, generated a sense of, okay, rather leave it. That's why you had an adoption of a couple of percentage points, but not mass adoption. So I expect, nevertheless, mass adoption, and we will see this already over the last 1 or 2 years, when the big brands of traditional finance are jumping on the topic for various reasons, because for cost right demand, because of efficiency, and others. But when those big brands with the trusted logos, so to say, are jumping into this topic, then the masses will follow, and they will find, surprise, cheaper and more efficient products.
Okay, where is the real business value for these big companies, big members to hop on this trade of tokenization?
It depends on the product. You cannot compare a stable coin with crypto progress. Yeah. So, but let's start with stable coin first. Yeah, token is formed money, so to say. And here it also depends where you are, because here in Europe, we are very used to instant payment already, especially starting in October 2025. So, but global, and not only in Europe, instant and free payments. That's number one. Number two, especially in countries where you have maybe high inflation, you have a store of value. So when you're in Turkey or in Argentina, you're afraid that your own currency, where you get your salary, might suffer inflation, and it's not as worse much as it back in the days. Then you might directly switch it on your phone into US dollar or in another fiat or denominated stablecoin, or just to store the value. The third is that, of course, for the various traders or crypto traders or traditional traders that want to have, let's say, pull out of a certain holding, want a more safe haven. Yeah. So these are, let's say, the current arguments for stable coins. Plus, I forgot one. Let's put a fourth one to it. It is also the UX. We're using very intensively the various social media or bit chats or WhatsApp or Telegram, what have you. And then there will be, or I will see a future when 1 or 2 years, we go out for lunch. I owe you $10, and then after lunch, because we were settling the lunch on WhatsApp anyway, where to meet and how, and then come 5 minutes later, then I send you directly on the same messaging service that dollars that you owe me for the dessert.
But most of the time, when speaking to people about this, one of the selling points of the regulators, of the institutions, is like more tokenization means less bank fees. So more money saved for the consumers. Like you won't have to be pay your banks this fee and that fee. You have straight token from your central bank. It's the same USP for digital euro. But is it actually like that? Will we be paying less fees really? Is it realistic?
We will settle some money, I would say. Yeah. So banks have had a hard time already over the last years, and the decentralized finance idea would basically limit the need for banks to zero. But because of these strong brands that they have, 95% of the population would follow their big brands and their banks. So again, we will be somewhere in the middle. They also need to pay less to other intermediaries. So they might give a little bit to the clients, but not all of it. And I would compare it a little here to, or how the future finance could look like in 2-3 years from now. It's like when your car breaks down. When then you might have the possibility to go to a mechanic and for a lot of money. Or you go a trusted one, yeah. They have an Audi or with an Audi. Or you go to a mechanic right around the corner, cheaper but not the trusted one. Or you buy a car. Yeah, okay, you buy a new car. That's not the topic that I agree about. But or the third one is basically if you know how to do it, you can reduce the cost tremendously. And same goes for crypto. Either you go to Audi, which is in the back. Yes, it costs more, but trusted one. Or you know someone knows someone who knows someone, then you pay less. Yeah, or you know how to do it, then you do it in a DeFi way and transfer money from A to B, on an Augusto del Watt.
So, do you think that the general business model, the traditional banks, will get a major change, major shift? Is it awaiting for the banks?
It will come gradually. Yeah, so especially as I said before, innovation takes time, especially in banking, and here there will be definitely a shift. Maybe a little bit more towards peer-to-peer, but the banks will be then the provider of the platform, and we will interact peer-to-peer then. Yeah, so the shift will happen over decades. Also, the question when you look at the digital euro or stable coins and real money and the bills of the money, will cash disappear? There will be a parallel run for decades. Yeah, so give it some time, be patient, but we will see year after year after year some movements.
Okay,
not tomorrow.
We've heard from the representative of the European Central Bank today that some kind of realistic deadline is like 2029, 2034 for the digital euro. What asset classes do you think are going to go through the process of tokenization as a priority? Like, what are we paying today with a monkey or plastic credit cards that we're going to be paying without tokens maybe in the future?
Yeah. It depends on look, it's like when you want to communicate, yeah? Back in the days we could only speak, yeah? Then we could speak and can do something with fire, yeah? Then we could do something with fire in red letters and so on. And now we are somewhere where we have many ways of how to communicate. From speaking to writing something on WhatsApp, to writing an email, to writing a SMS, to writing various ways, yes. And sometimes you take a pencil and write a love letter, yeah? So, and we have a certain feeling when to use what. I will expect the same for tokenized money, be it digital euro, be it stable coins, be it a token itself, yeah, be it something like a fluctuating token, Bitcoin. So sometimes it will be this, sometimes it will be that, and we definitely will have various possibilities, like what we have now, various possibilities to communicate via our phones that we just could figure out with.
Okay, but if we focus on tokenization, when we focus on different asset classes, what's the first to go? What's the first to tokenize?
The first to tokenize, and this is happening already, I would say, is tokenized money, stablecoins. The second, and this is the numbers speak for itself, is in wholesale banking, so banks to banks, money market funds, tokenized money market funds, because then the banks can get their yield already within an hour and not T+1. Yeah? And the third one, what happened already in the past is tokenized real world assets in a way that tokenized collectible, from the Pokemon cards to sneakers to wine to whatever. So to make super niche asset classes accessible on the global market for their respective community. So these are, let's say, the first asset classes that have, well, where we see already some adoption, and this will reach, let's say, full tokenization almost. So
looking on this process today, from the regulatory side, is it happening at the speed it should be happening, or does it be to accelerate?
We cannot force it anyway. Yeah. So we will, it comes gradually, because you need client demand. Client demand brings then the offering and the supply. Then you have more client demand. Then, at least in theory, you have a certain threshold at 10 to 15%. So when you reach 10 to 15% of adoption, then this flywheel that they were mentioning is strongly increase quickly up to a rate of, let's say, 80-90%, and then it flattens again. Yeah, same happened at the internet times. So the Grammys of this world are maybe not internetized yet. So these are exactly the remaining 1 to 10% of least of best communities.
Yeah, so you speak to a lot of clients, obviously from different industries. Like when they ask you what's going to be the biggest change on the market in the next couple of years, even as 5 years, what do you see?
When I look at the crypto space, I would say that people will not recognize anymore whether it's a traditional money, whether it's on-chain or not, or whether it's crypto, whether it's a token. So people will just use it. Yeah. And this will be a change that a lot of people will already seeing and will, yeah. And the same as
use CMOS, right?
Seriously, yeah. Same happened at the internet times. I mean, back in the days, 20 years ago, everyone was talking about TCP, IP, and was bridge protocol and so on. No one is talking about this anymore.
They just use it.
They just use it. They pull out Instagram and post whatever. Yeah, and we'll see additional new business models rising from these areas, like we saw with the internet and